Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for tuning into this video today as usual guys, and don't forget to like this video and subscribe to my channel. That will be awesome. Thanks 𝗲𝗀𝗀𝗀𝗀. community. So welcome to all my new copiers over the last couple of weeks. I've had quite a lot of new copiers, over 200 actually in fact, and my copier count is actually over 1,860 right now, and my AUM is up to about 5.6 million. So lots of new copiers, and I really appreciate both the new copiers and also my really long existing copiers who have stuck with me for many months. And I'm really glad to say now that last week we actually hit our all-time portfolio high, which was really pleasing. So on a year-to-date basis, we're up about 150%, which is a really great result, something that I'm extremely proud of. And our month-to-date basis for November is up about 5%. So all in all, we're doing really well and we're getting a lot of momentum. I want to thank all of my copiers who have stuck with me in different times. I think it's very important that we build up this relationship of trust, and that you know that I'm always there and available to answer any of the questions that you may have, and provide you more and more information and content which makes you feel much more comfortable in the copy, but also starts to build your conviction as well, because conviction is one of the most important things when investing, because it gets you through not only the good times but also the times where things might not be going as well as possible. And that is really important, because you need to know that investing is full of its ups and downs. Yes, in general, over the long term, as long as you're making good, solid investments, you're very likely to make profits. But the road to profits is not always smooth. Sometimes there's some months that might be up, and sometimes there's some months that may be down. So it's very important that you have conviction to be able to ride out some of those tough times in order to be able to reap the benefits of those in the future by making strong compounded returns. I'm really happy to report that last week our portfolio fared really well, and we were actually up over 3% for the week. And this is an extremely good result, because if we compare this to the US indices, such as the S&P 500 and also the NASDAQ, the S&P 500 was actually down 0.3% last week, and the NASDAQ was actually down 0.7%. So not only did our stocks do really well last week, but we also had some good performance as well from crypto. So overall, we outperformed the indices, and this was really an excellent result. I also added to a couple of our positions last week, such as Everbridge, which is a mass crisis communication company which services some of the largest blue chip companies in the world. And as you know, we never have a shortage of crises around the world. And I felt like it overly sold off last week on the back of earnings, which I thought was actually a pretty good earnings report. So I added to our position slightly on Everbridge, and I also added to our position in Leidos Holdings as well. As crypto also had a good week last week, I also trimmed some of our crypto positions as they hit all-time highs, in line with our strategy of trimming positions as the price goes up in crypto and the further we get in the crypto cycle. It is working really well at the moment, and I think it's important that we don't necessarily try to time the market, and that we just sensibly and conservatively trim our possessions, reduce our exposure and diversify into other areas. As we move on to the global market update, and I'll be providing you a summary of some of the key news that happened last week in the global economy. And I'll start off with the US. As I mentioned at the start of this video, the S&P 500 and the Nasdaq were both moderately down last week. And that is on the back of a number of good weeks that we've had in the market, as the S&P 500 and the Nasdaq have continued to hit all-time highs. And what actually happened was that there was a consecutive amount of 9 days, which was the record streak that they've had since 2017 of positive up days in the S&P 500, and that was actually broken on Tuesday when we had a down day. Last week, the stock market and economy chatter was actually dominated by the inflation figures that were released last week, and this showed that inflation had increased to 0.9% for October, and that is higher than the 0.6% that had been expected. And this takes inflation on a yearly basis for the CPI up to 6.7%, which was extremely concerning. And this is actually over a 30-year high, and it's the highest inflation figures that we've actually had since December 1990. So this is extremely interesting. I also, as I've been saying over a number of months, that I don't even believe this inflation number is 6.7%. I actually think it is a lot higher in general. And the Fed have been saying for a long time that this is transitory, but I think it's going to take a long time to work out, as we have a lot of supply chain issues and there is a lot of demand for product and services after people have come out of lockdowns and people are starting to get back to everyday life. I can see this increasing for a while. Although I believe that inflation is likely to continue to persist for quite a long time, I have mentioned in my previous videos and in my communications that our portfolio has been set up with high inflation in mind. And it's something that even back in 2020, I saw as a big problem that could be facing us on the horizon because of the amount of money printing and the amount of stimulus that went into our economy and the US debt levels. So what I have actually done is I designed our portfolio with inflation in mind. And that is why we have a really high weighting in Bitcoin, which is a scarce asset with limited supply, which I expect to do well in inflationary environments. We also have home builders in our portfolio, which I think will do really well as well in inflation, as well as financial services and insurance companies, which generally do well in a higher interest rate environment. Consumer discretionary shares were generally down last week, and that was mainly on the back of Tesla having quite a substantial dip last week in the markets. And that is mainly because Elon Musk, again, was very active on Twitter, and he actually put a poll on Twitter which asked people in general whether he should sell a part of his Tesla shares. And the overarching view was that he should sell some of his Tesla shares, and this caused quite a substantial dip in the Tesla shares. The material sector was generally up in the stock market last week, and that was really on the approval of the $1.2 trillion President Biden social infrastructure plan, as they have done really well because they know that there's going to be a lot of spending overall in infrastructure. Last week also saw one of the largest IPOs since the Facebook IPO in 2012, and that was of EV car maker Rivian, who actually had a very large market cap already on the release of the IPO. And I generally think that as a lot of these new IPOs are, it is extremely overvalued. As we move on to Europe now, and last week the European indices were generally up, and that is even despite the high inflation figures that were released. And I think a key reason why the markets were up were because people are expecting a very loose monetary policy from Europe, which is generally very good for shares. We are starting to see some concerns again around COVID-19 in Europe, and this is ultimately not that surprising considering we are just starting the winter season. And although vaccination take-up rates in Europe are generally quite high, and we are seeing a tail off in the number of hospitalizations and also fatality rates, we are also seeing high cases rates around Europe. And this has actually caused some of the European countries to start to consider or to put in new implementations and restrictions on COVID-19. And we have seen that Holland have actually started to implement a mandatory mask policy and also have implemented some short lockdowns. We have also seen countries such as Denmark who have had to reinstate their proof of vaccine in order to be able to go to a lot of indoor venues. And we also saw a very high number of cases in Germany of COVID-19 cases, and they actually reported over 55,000 new COVID cases. There's also some data released from Europe last week which said the Eurozone industrial production had decreased by 0.3%. But this was generally seen as a positive sign because the consensus expectations were that it was going to decrease by over 0.5%. So this generally provided some positive sentiment. There was also the European Commission also said that they expected the European economy to expand by 5%, and they actually raised those forecasts from the previous 4.8%. However, on the flip side of that, the UK announced that UK economic growth had slowed to 1.3%, and that was below the 1.5% forecast issued by the Bank of England. As we move on to China now, and last week Chinese stocks generally performed very well, and so did the Chinese stocks in our portfolio. So stocks such as JD.com and Alibaba both did very well last week. I think that there's a number of reasons why Chinese stocks did well last week. And I think one of those is to do with the fact that over the last few months, the Chinese government have continued to with easing measures overall in the economy, which has also helped to provide new liquidity overall in the Chinese economy. And I think the other reason why was that there's been a lot of fears around the Evergrande situation and the overall property development sector in China. And there were a lot of fears last week that Evergrande were going to default, and there was actually a lot of news stories which published this to say that they were just on the brink of defaulting. However, they were able to make their debt payments before any deadlines, so they did manage to just stop themselves from defaulting. Another slightly worrying piece of data that came out of China last week was that the PPI, which is also known as the Producer Purchasing Index and is also often known as factory gate inflation, actually hit a 27-year high, and for October was at 13.5% on a year-on-year basis. I think it's pretty common knowledge that we have seen an increase in commodity costs and also building material costs around the world, and this has caused that PPI figure in China to spike. But I think the more worrying thing is that the CPI, which is the general inflation figures that are touted around the world, generally lags the PPI reading. And that is because it does take some time for the costs of the manufacturers and the companies to make its way to the increased costs in consumer goods. And I think that it's likely over the coming months that those costs will be passed on to customers, and that we're going to see, as demand increases, we are going to see much higher CPI figures in the future. So that is definitely something to keep an eye on. However, there was some positive data released from China, as we saw figures released that exports had increased by 27.1% on a year-on-year basis. But we have to remember that that was on the back of the previous year, which was very slow because of COVID-19 restrictions and lockdowns around the world. So now we move on to our top performing stocks of last week. And our top performing stock of last week was SailPoint. And SailPoint had increased by 24.4% last week. So it had an absolutely massive week. And the reason why was that it released its Q3 earnings report, which it really blew out all the numbers out of the water. So it was up on revenue, up on profitability, and they even increased the yearly forecast. So this really caused the stock to overall spike, and it's something that I am very bullish on, and I'm really glad that it's starting to move. The second best performing stock in our portfolio last week was JD.com, and JD.com increased by 10.8% last week. And that was on the back of a really good week overall for Chinese stocks. And there had previously been a lot of pressure on Chinese technology companies. However, I do feel this is starting to ease. And I think that JD.com, the prices were very depressed. However, I do see that 2022 is going to be a really great year for the stock, and it is already starting to do really well in our portfolio. The third best performing stock in our portfolio last week was Stanley Black & Decker, and that was up over 6.9% last week. And Stanley Black & Decker did very well in parts of 2020 and 2021, as there was a lot of lockdowns and restrictions and more people were doing home improvements. However, the prices started to tail off a bit towards the late part of 2021, and I felt that the valuations had become very attractive, and they have a very sticky product and a very strong customer loyalty and a very good set of brands within the portfolio. And I thought it was a really good time a couple of months ago to take a position in Stanley Black & Decker. And this position is starting to bear fruits. As we move on to crypto now, and again, it was another exciting week for crypto overall, as Bitcoin hit its all-time high again of 69,000, and there was a lot of bullish sentiment overall in the market. However, just after it hit its all-time high, there were some concerns again around Evergrande and a lot of news stories that they could potentially default, which they didn't in the end. And also there was some outages of some of the major crypto exchanges, even though they were short term, which actually caused a lot of liquidations. And there was about $560 million worth of liquidations in a very short period of time. And we saw the prices decrease overall of crypto. On Friday, there was a decision by the SEC, and the decision was around the Van Eck Bitcoin physically backed ETF. And as I said previously, there's a difference between the physically backed ETFs and the futures ETFs, which were approved a few weeks ago. And the SEC are generally very positive on the Bitcoin futures ETF as they run on a recognized exchange such as the CME, which they are familiar with. However, they have always had a problem with the physically backed ETF or the spot ETF, and that is because they say that it is more easy to manipulate. And I think one of the main reasons is that the majority of the exchanges for Bitcoin actually are outside of the US and are outside of their jurisdiction and their control. So they generally have a problem with these. However, in my opinion, they are less easy to manipulate because the futures ETFs are generally used as arbitrage opportunities, and they can either trade at a premium or at a discount. So I don't think that this necessarily protects the consumer. However, that was rejected on Friday, and we did see a reduction in the price of Bitcoin. However, it was very short-lived, and I think a lot of people had already expected that that was going to be rejected. So I think it was already baked into the price, and we've already started to see a recovery over this weekend, and now Bitcoin is sitting at a very healthy price. Last week we also saw the release of the Coinbase Q3 earnings report, and as you will know, the earnings reports are backwards looking, and September was generally a tough month overall for crypto. And what the Q3 earnings report showed was that they were below expectations on revenue, although it is very hard for a company such as Coinbase to be able to predict their revenue. And also it showed that the trading volumes were generally down for Q3 against expectations. However, this was not seen as a particular surprise. And although the share price decreased after the earnings reports were released, after the earnings call, which was generally seen as very positive, we have started to see an increase again in the Coinbase price. And obviously Q4, I'm expecting a really blockbuster Q4 earnings report, and that is because we have hit all-time highs several times, and we have seen a real spike in trading volumes where Coinbase make the majority of their revenue from. Last week, we also saw the announcement by pro-Bitcoin Miami Mayor Francis Suarez, who actually announced they were going to implement something called the Bitcoin dividend. And what this really is a dividend for Miami citizens, which will actually be paid in the Miami token. But Miami is really establishing itself as the crypto hub of the US. This weekend, we also saw the first major update to the Bitcoin protocol since the contentious 2017 SegWit implementation update. And Taproot, which is the new update for the Bitcoin protocol, is not contentious, and it has gone through pretty smoothly. And what Taproot will allow was it will allow smart contracts to be able to be implemented much easier on the Bitcoin protocol. It will also release lots of new features such as Schnorr signatures, which will allow transactions to be a lot more private, and will also have speed of transaction advantages as well. So it is generally a very positive and non-contentious update on the Bitcoin protocol. Last week, we also saw Ethereum hit an all-time high. And as I've been saying for the last couple of months, that I expect crypto to have a very explosive Q4. And especially in Bitcoin, as well as Ethereum and Binance Coin, which are major parts of our portfolio. However, you should expect some volatility, because at this stage of the cycle, you generally get a lot more volatility. And although you see sharp increases in the price of crypto, you also see some pullbacks, which are generally a lot shorter in duration before taking the next leg up. So don't be surprised or panic overall if you see some volatility in the crypto prices. However, I will continue to trim our positions in crypto as the prices go up, and I will diversify some of those funds into other asset classes in order to provide our portfolio with more robustness. Thank you very much for listening to my video today, and it really is a pleasure to be able to speak to you on a weekly basis. I really do care about all of your investments, and I'm most happy when you are all successful and are making money from the copies. I will try my best to not only grow your portfolios, but also protect your investments, because I do know that it is your hard-earned money, and I really do hope that you all stay with me for a long time and we enjoy a successful journey together. Also, don't forget to join my community group, especially to some of those new copiers, and I will leave the link and the invitation below. And have a great week ahead.